we are hollowing out these companies. It's just about the rich individuals that are up at the top that get the benefits from this, and the rest of us, our lives aren't worth it.
Okay, guys, before we begin this interview with Lynette Zang, just a quick word from our sponsor, the Patriot Sun Cooker. Looking for a fantastic gift this Black Friday? The Patriot Sun Cooker is an amazing device that allows you to heat and boil water outdoors using only sunlight. Depending on conditions, the Patriot Sun Cooker can heat water in as little as 30 minutes, and it'll work anywhere the sun shines. Use it to boil water, cook noodles and rice, or sterilize water for drinking. The Patriot Sun Cooker is a great unlimited source of free energy. And the Patriot Sun Cooker is the perfect gift for you and your loved ones this holiday season. And it's your last chance to get 20% off the new 2020 model before they sell out. So take advantage now and give the perfect gift this season for the outdoorsman or anyone you love. Visit patriotsuncooker.com. I'll leave the link below this interview. All right, friends, let's begin. We have back on the line Lynette Zang from ITM Trading. And Lynette, first, welcome. And second, my goodness, it's pretty bizarre for me to have you on to talk about the economic apocalypse. And somehow that's a reprieve for me, given the deep-rooted, the thick topics I've had to cover recently. Disturbing topics about the deep state and their agenda. But welcome back. Let's talk about the economy.
Well, I'm so glad to be back as always. And if this is light, well, okay. I'm looking at a lot of stuff. I mean, you don't even have to dig in the deep state for the garbage that's floating to the surface these days.
Where would you like to begin? Of course, we're concerned about this repo, this overnight, these trillions of dollars now going to the banks. We don't know which banks are getting the money, but clearly there's a problem. I think contagion is taking place. One of these banks, international banks, maybe Deutsche Bank, is super sick. So let's talk about repo at some point. I also know that the internals are breaking down regarding the stock market, even as it hits all-time new highs. So you choose. Where should we begin?
Well, let's start with the repo market and whether it's Deutsche Bank. Number one, who has access to it? It's those commercial banks. So whether it's Deutsche Bank or JP Morgan or Citibank or any of these, the usual players, they are the ones that have been chosen to survive. But here's the real problem, and people need to really understand this. The problem is that generally what fuels and funds the repo market are money market funds, where mom and pop park their cash thinking that it's safe. And what has really happened is a loss of confidence bank to bank, so that the banks would not loan, or bank to hedge fund, et cetera, those that access the repo markets. And they lost confidence in each other, so that system froze. And that is the basic underlying plumbing of the entire global system. So they didn't want you to know it. Like, do you remember it was the Prime Reserve Fund or something like that in 2008, and that froze and there was a run on the money markets? And that's when they jumped in and backstopped, the feds did, backstop them 250,000 an account to stem the tide. And then they changed all the rules.
I do remember that. I forget who the representative was, but I played the soundbite in the past, and he was on C-SPAN after the 2008 crisis talking about how the Fed had to step in because there was a run. There was a run on, I think it was money markets, to the tune of $600 billion.
On Thursday at about 11 o'clock in the morning, the Federal Reserve noticed a tremendous drawdown of money market accounts in the United States to the tune of $550 billion was being drawn out in a matter of an hour or two. The Treasury opened up its window to help. They pumped $105 billion in the system and quickly realized that they could not stem the tide. We were having an electronic run on the banks. They decided to close the operation, close down the money accounts, and announce a guarantee of $250,000 per account so there wouldn't be further panic out there. And that's what actually happened. If they had not done that, Their estimation was that by 2 o'clock that afternoon, $5.5 trillion would have been drawn out of the money market system of the United States, would have collapsed the entire economy of the United States, and within 24 hours, the world economy would have collapsed.
I mean, it was a literal global run on the banks.
Exactly. And the same thing was happening in September. And they couldn't let you know. That's why what they're doing with all this new money injection that they don't want to call QE, but it's new money printed. You can see it in all of the graphs. You can see, and they even admit it. They just don't want to call it QE. But they had to do that or you would have known, and there would have been another run on money markets.
Yeah, it's frightening. So let me just do a screen share here. We've got this article from Wall Street on Parade, and the claim is the Fed has pumped $3 trillion into the repo market. Yes. And you know, our friend Bix Weir has been covering this closely. Let's just listen to a brief clip from Bix to see what his take is on this. All right, here it is.
Monday morning, and as expected on the repo market, they had a brand new cash injection, newer than the other ones. It was announced prior up to $25 billion. And it was oversubscribed to 48 billion. Hang on, I got the door. Amy's taking care of it. It was oversubscribed, 48 billion. And what they're saying, the official word, is that it's needed for end of year. Where have we heard that before? Remember, it was needed for end of quarter. Well, since then, about 310 billion has been lent on overnights every day. Every day that money is needed. Most of it's repaid the next day. Some is longer term, some are permanent, but we're at the total count right now is about 300, I think it's 315 as of last Friday.
Hey, Lynette, I'll pause it there. And look, I just wanted to share that because the numbers are very confusing. Wall Street on Parade is saying it's already been $3 trillion. Look, the numbers are cloudy. They're not going to tell us the real numbers, and they're not going to tell us which banks are getting the money because they don't want the world to know which bank is failing. I swear it's probably Deutsche Bank, but contagion is contagion. If one goes down, they all go down, and it's because of the derivatives.
Exactly. And these numbers, actually, I sent you some links to share directly to the Federal Reserve because there's actually two programs that are going simultaneously now. You have the repo injections, and they do post that every single day. And what I found really interesting about it, because you can go back and look at the history. So if you went back to, say, the beginning of September, then you could actually see, there you go. That's one of the links that I sent you. Right. And you have to, there is a history button. So you can see what they've made available in their ample reserve protocol, which they announced in January, February, when they did the Fed pivot. So you can see there's like 3 or 4 per day of injections. And that first column shows you what they're making available. The second shows you what they have actually issued. So there's your demand. But in the beginning, there was more demand than what they were making available. So what they did was they just increased the amount because we're going to give those banks every single thing that they want. But critically, this is new money. And the way that you know that it's new money, I sent you the other link to the Fed where they post the repurchase agreements on Wednesdays. And when you see any of those Fed graphs that goes straight up like that, it's the Fed graph that goes straight up like that, that's new money. And then beyond that, or I shouldn't say beyond that, in addition to that, they have they're purchasing the short-term treasuries to push down the yields because the yield curve was inverted. Yeah, see that big spike on the end?
Yeah.
Right? You can see what happened during the crisis in 2008 with the repurchase agreements, and look at what's happened since September. Right?
It's way worse. It's much worse than 2008.
Exactly. So the central banks are freaking out. Now, JP Morgan is right in there because up until this point, while I can't tell you exactly who's taking, what, but what I can tell you is that prior to this crisis and leading into the crisis, JP Morgan made up about a third of the repo market. So it was actually JP Morgan that actually triggered this crisis by saying we're not going to lend. And they can come up with all sorts of excuses. And I wanted to make a comment about the overnight part where they'll pay that money back. They don't. They roll it over for another overnight and another overnight and another overnight. Or you would see those numbers on the graphs coming down, that one that you just showed. You would see, now they are bouncing a bit, but you would see them coming down. It's still up at nosebleed levels. And that first chart that you showed where they post every single day how much they're pumping into the repo market. Well, if they were getting paid back, they wouldn't have to keep creating all that new money. They wouldn't have to be injecting this much money into the repo market because they'd have it from the paybacks. So people really need to understand that when these banks or these corporations or these governments take out debt, the intent is never to repay that debt. It's to roll it over and roll it over. Now, imagine when they lose control of interest rates, which they haven't yet, because of all this new money injection, right? And the buying of the treasuries to manipulate the yields. So the big problem, because people always ask me, well, how long is that going to last? Well, it's going to last until it gets too expensive to do, and it becomes obvious that what they're doing isn't really working. The reason why you see these at extreme levels, and I could show you tons of graphs that look extreme particularly as compared to the crisis that we were going through, is because it takes more and more of that hopium drug just to make things appear normal, but they're not normal. And if you knew that, if you had money in money markets and you actually understood that those money markets froze, they just papered over it like they did since 2008. They didn't fix any of the problems. They just are giving them to the bank junkies that need this fix because they need more and more and more and more.
Yeah, I'm telling you.
Sorry, I went a little.
No, it's fine because look, this stuff is confusing, and it really is an economic tsunami coming at us because of these banksters. Look, the best way to rob a bank is to become a bankster. That's what these guys know. That's the secret. You don't need to. Yeah, you don't want to do armed robbery. They'll catch you and you'll go to the federal prison for 10 or 20 years. You just need to become a banker. So I mean, that's what's so sick about this. And you look. We want to help people. We want people to be able to survive whatever's coming. And I know it sounds passé to say buy physical silver and gold, but look, I just don't know. There's precious little else you can do when these people control the entire global economy. And they're just throwing paper at it like firewood in a fireplace. I mean, they're trying hard to continue this charade, and they're never going to tell us what's really going on. I think I read something the other day that said they're not going to let us know which banks are getting the repo money for 2 years because they don't want us to know, because there's a problem and they're papering over it.
Just expanding that a little bit, what difference does it make? They're all incestuously interconnected. I mean, Deutsche Bank has been a dead bank walking, a zombie bank for how long? Since the crisis. I think their share prices were somewhere around $120 a share in 2007, and now they're at like $7 a share. That company, that corporation, which is exactly what it is, those banks are corporations, is a zombie corporation. Why don't they let it fail? Because it's tied to every other single bank and financial contract out there. All those derivatives that they're holding on their books, they just created, though they tried to do this before and it didn't work, but they just created in July, so the beginning of the quarter that just ended, a quote unquote bad bank. So they transferred these illiquid, I can't call them assets, but they transferred a whole bunch of crap that has no market. It's illiquid. Nobody will buy it. And they're trying to offload those and shrink their size so that they're not systemically important globally. It ain't going to happen. Do you know how much it costs them according to their most current financial statement? They have, don't hold me to this because I'm not looking at it, but I'll be pretty close. 151 billion notional value. Now, keep in mind, there's no market for it. So that's simply the amount that they are stating that it is. Who knows how much that crap is really worth? It's really worth zero. Okay. And it cost them $1.1 billion and some valuable income producing assets like clients in order to offload 7 billion out of the 151 billion. Did you follow that insanity?
I'm trying to remain calm because this stuff makes me so angry. And I think people get sick and tired of me sounding a little angry lately in so many of my interviews. But I know we are under attack, right?
We are.
Vaccines or any of these other things that I talk about and cover with my esteemed guests, this trans agenda, like I just discussed with Corey from Corey's Digs. But I mean, we're under attack. And look, if we take a look at the stock market, right? Because that's what everybody likes to do. The president, everybody says,
yes,
we're doing well because the stock market's doing well. I always
Yes.
like to point out Amazon. Let's just take a look. $1,793 a share. Now, folks, when we say buy physical silver or gold, because what in the heck else can you do to protect your money? It's real. Okay, there's the gold. Look at this. Amazon's earnings per share in 2019 is said to be $24 a share. It's a $1,793 stock. Do you know how many years it will take before the earnings per share equal the stock price? 77.79. That's the PE ratio on Amazon. It's madness. And I guess it's like a hot air balloon. It'll keep going up until it can't go up any longer. And sooner or later, it's going to start coming down. And look, I don't want a stock market crash, but you tell us about what are the market internal technicals telling us?
Okay, well, first you hit on one of my personal bugaboos. So I'm sorry, but I'm going to rant a little bit more because this is the rise of the unicorns. And what Amazon really did, hey, it has some earnings per share, but in the meantime, it put a lot of local businesses out of business because they were allowed to go in and not charge sales tax and undercut everybody because Wall Street didn't give a crap if they made any money or not. But mom and pops have to make money in order to survive. They are not funded by this money printing machine, these central bankers that have made this money so cheap. So when you're talking about the stock markets and them making, I think today it was like 25th new high for 2019. The reality is that's just created by a few big players. When you look underneath the surface, you see a very different picture. You see deteriorating technicals. Now, one of those things, not to get too crazy, but to help people understand, is the advance, so the number of stocks that are moving up versus the number of stocks that are moving down. That's the advanced decline line. Even as the markets are making new highs, there are more stocks that are declining than are rising. That's not good. In addition to that, you just pointed out the price earnings ratio. So the valuation is the most expensive stock market in history ever, bar none, in nominal terms. So in terms of fiat money, dollars. And yet, those dollars have not even 4 cents worth of purchasing power out of their original value. And 10 trillion times zero is still zero. So we're not far from the dollars going to absolutely zero. On top of that, a moving average. So this is another technical term, and it's simple. What they do every day for 50 days is they total up where the stock closes and they divide it by 50. And that gives you a 50-day moving average. If the current stock price is above that 50-day moving average, then that is a positive sign. But what we're actually seeing is that more and more stocks are actually trading below that 50-day moving average. When they trade below the 200-day moving average, then you're in deep doo-doo. But this is not positive. So the stock markets are making new highs because, hey, it's not like companies are even going in and buying the individual stocks, or individuals going in and buying the individual stocks.
No, they're buying their own stock back. See,
They are buying their own.
Let me get to that
Yes.
when you're done. Let me get to that when you're done, because it's sick.
Okay.
They've hollowed out these companies by buying the stocks back and enriching the CEOs and the upper management at the detriment of these companies. And I have one shining example of that I want to share in a second.
Okay, and it's actually even worse than that, because a big part of what's keeping this market moving are mergers and acquisitions. And how are they funding these mergers and acquisitions? By taking on more and more and more and more debt. So yes, you're 100% right, because they're paying these shareholders out in dividends and buying back shares of stock, which means there are fewer shares out there. But one of the points that I really wanted to make is about herding, herding, because you just have like four or five investment companies that actually create all of these products and manage all of these ETFs, and they're all buying the same things. They're all buying the same things, and they aren't actually even buying the stocks. They're doing so much of this with derivatives.
Mm-hmm.
And so you rush in, okay, the derivatives make the stock go up. What happens when you rush out? You can't. They're not liquid. They can't. So just like you were talking about the money markets earlier, the same exact thing is going to happen when these ETFs are tested, because those are a pretty new product. They have not been tested through a crisis yet. And you only have a few players. It's a very crowded trade. And I think people are going to be very shocked by how quickly these markets just go like that.
Well,
they do.
Yeah, and there's something really, 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 really wrong with these markets when E-Trade, Scottrade, whatever they go by now Ameritrade says, oh, zero. We're not going to charge you a penny to trade stocks. That was their bread and butter, was charging $7.95 or $8.95 a trade. Now it's zero. I guess Schwab went to zero. It's insanity. Tell me how they make money. That makes no sense.
Okay. Exactly. Look at, nobody can work for free. Even TD Ameritrade, and then what it was, Schwab, that was one of the bigger kahunas that did it. But the reason is because they hypothecate or use the equity that you have in those accounts to go out and speculate and do trades. So they make more money off of your equity than they do after you paying them $5 or whatever.
Oh, how is that not illegal? Because if they make bad trades, if they get into bad derivatives, they're going to go under, just like these Wall Street banks, just like the international criminal banks. And you're going to be left holding the bag, right? This is why we preach physical silver, physical gold. What else can you do, guys? I mean, you can buy land. I guess you can buy land. Go buy land. And just look, here's the thing. I wanted to share this with you because it's just enraging. This is the single best example that I can think of how these corporate executives have enriched themselves while destroying their companies. You ready for this? Here's the best example. Let me do a screen share. Here it is. Boeing.
There you go.
2018 raises its dividend 20% and boosts the buyback plan to $20 billion. Quote unquote, reaffirming its bullish outlook. And what happened? They didn't have any money for research and development, and they had to compete with Airbus, who was eating their lunch. So what they do, they took a Boeing 737, right? The prize of their fleet, and they wanted to make it faster, leaner, and more fuel efficient. So they came up with the 737 MAX. But because they've been doing all these stock buybacks and didn't have the research and development, and didn't pour the money back into the company to make better products, they took the existing 737 with landing gear that was too low for bigger, more efficient engines, and they put the bigger, more efficient engines on this same plane anyway, and then had to go to computer software people to try to make the plane fly. And now the entire company is probably going to go under because nobody wants to step foot on a 737 MAX. This is, seriously, these people at this company ought to be rounded up, and whoever's responsible for this needs to be put in prison, because this is a crime against humanity, because 2 of those planes went down and hundreds of people died.
Yep. And what's the price of a life? Right? Our lives have basically, the only value we are to them is, can we shop? And you know, the thing about Boeing is it's a duopoly. It's not like you have a whole lot of choices of where you're going to go buy your airplane. So even though they consistently get this bad press, look at their stock price. It's ridiculous. They should be punished far, far more. But hey, what are you going to do? Because the Boeing is here. Airbus isn't that in Europe or something?
Yep.
So, you know, I mean, hey, we've got to make sure that Boeing staying alive is far more important.
Yep.
That I even told my daughter the next time we travel, she is to check which plane they're going to have us on. Didn't I tell you that? Yep. The next time because I don't want to step foot on a 737.
Well, you certainly don't want to step foot on a 737 MAX, and they're still all mothballed right now because Boeing can't figure out how to fix these damn things, because what I said is accurate. These planes, they didn't re-engineer the 737. They took the existing 737, raised the wings or whatever they did to get these larger engines under them, and then the damn thing wouldn't fly right. So they went to their computer software guys and said, make this thing fly right, with computers interfering in the flight program, and then they didn't inform the pilots. And 2 of these planes went down. And nobody wants to fly on these things now. And it's just an outrage because, again, who got rich while all this was happening? The executives and the upper management at Boeing through these stock buybacks. And when the stock price went higher, they got all of these bonuses. And meanwhile, they were literally destroying the company. One of the jewels in America was Boeing. So what happens when we destroy all the jewels? What happens? What do we have left? We have a hollowed out economy that nobody trusts, and companies that nobody trusts. I mean, that's pretty much where we're at right now.
That is, unfortunately, with the stock market making new highs, people aren't looking at this. They're going like, oh, my 401k seems to be doing, and that's the point of it, seems to be doing okay. Oh, I have some money in money market. Well, maybe I'll just go, that's what they're hoping. Maybe I'll put it in the stock market because I don't want to miss out on all of these gains. And what they don't realize, what people do not realize, is for every transaction, for every buy, you got to have somebody that's willing to sell. And when you're wanting to sell it, you got to have somebody that's willing to buy it. And since 2013, the liquidity, the ability to do that easily has been getting worse and worse and worse, because the whole market, the whole foundation of the trading from market makers, etc., it's gone away. And really talking about the all of these companies, and this is true for management and mutual funds, etc., where they've gone to these algorithms. And going back to Amazon, I just heard this yesterday, they employ a lot of the robotics, right? Well, guess what? Robotics can do things faster than humans can keep up. And with Amazon, because everything is going to computer, right? Technology, who needs humans anymore? But Amazon in their warehouses have twice the level of accidents because those people cannot keep up with the speed of the robotics. This is in the warehouses. It's awful. And when OSHA went in to check it out, they went, okay, no. And nothing was ever said. I mean, somebody died because they couldn't get out of the way of a forklift or something like that. Don't hold me exactly to that one because I didn't dig deeply into it. This is just what they were talking about on CNBC. Mm-hmm. So we are hollowing out these companies. It's just about the rich individuals that are up at the top that get the benefits from this. And the rest of us, our lives aren't worth it.
Yeah,
Our lives aren't worth it.
it's just so dog eat
disgusting.
dog. I know it
Yeah.
is. It is disgusting. And I've heard that they time the bathroom breaks over at the Amazon warehouses of their employees. And if you're not keeping up at a certain, per second, whatever it is, if you're not keeping up with whatever the predetermined quota is per package, right? Maybe you have 18 seconds per package, whatever it is, you're fired.
Whatever it is.
It's just, it's disgusting. And meanwhile, Jeff Bezos, we're told, is the richest man on the planet. The punchline to
Right.
that joke is that he's not. It is the intergenerational family bank owners that are the richest people on the planet, not single generation wealth built by Amazon.
Right.
Sorry, folks.
Right.
Jeff Bezos is a far cry from the richest man on the planet. All right, as we wrap this up, guys, you know that we do business with SD Bullion. They've been a proud sponsor of SGT Report for a very long time, but we also do like Lynette and her team over there at
Thank you.
ITM Trading. So you can shout out your website if you'd like, Lynette.
It is itmtrading.com, and we have an educational YouTube channel, which if you just go into YouTube and put in either my name, Lynette Zang, or ITM Trading, that'll come up. But, I've been studying currencies since 1987, and what makes us different, and not to say, everybody's got to do what they're comfortable with, but I created a strategy and a plan for myself because I saw it coming. And here, everybody has been trained on that strategy so that it's customized to your goals, your circumstances, your levels of comfort, so that you have a plan going into this mess. Because, yeah, you definitely should be buying gold and silver, but you need to know what kind for what function, like we were talking about property taxes and real estate. You're always going to have to pay your property taxes. Even if your house is paid off, you don't pay your property taxes, you lose your house. So there are a lot of things to it, but that's really what we like to do, is get to really know our clients and help them create their own strategy, which is going to be perhaps similar to mine, to get you through this mess and have you thrive, because this is wealth transfer. How about if it transfers to us for a change?
Yeah, that
What a
would be
concept.
nice. That would be nice. I don't think it's part of the plan, but it would be nice. And I think for those who understand the plan, they can position themselves to be better off regardless of what's coming. Okay. Well, Lynette, thanks so much for your time today.
Oh, Sean, I'm so glad to be here, as always. Great conversation.
Well, I appreciate it. And sorry for getting so fired up, guys, but I can't help it. I don't think there's a better example than Boeing of what some of these corporate CEOs and their teams have done to these formerly wonderful companies. And it's just really, really sad to see. And it costs lives, right? At the end of the day,
Yes.
That's really the crime in this case, is that it's cost lives. All right, guys, thank you so much for tuning in. We very much appreciate it. Thanks, Lynette.
My pleasure. Bye-bye.
Bye-bye. And guys, happy Thanksgiving, a bit early.
Absolutely.
Happy Thanksgiving. And a special thank you to my patrons who are keeping us in the fight for truth, regardless of what YouTube does with monetization. Thank you so much. And for real news 24/7, you guys can visit us directly at sgtreport.com, the antidote to corporate propaganda. God bless. Bye-bye.
My heart is just absolutely so broken, I think, in a lot of ways for men on this planet, because they've been, same thing as, has been done to the women, has been done to the men. And because it's been done to the women, the men have not been loved properly.